Our next guest, though, says the bearish thesis is now played out, and it is time to get more positive. Chris Harvey is the head of equity strategy at Wells Fargo. It's good to see you. What an interesting time to put out a note, given that the Nasdaq's gotten beaten up so bad. Why is now the time? He can't hear me. I'm told Chris Harvey can't hear me. Now he's good. Can you hear me, Chris?
Yes, I can. Scott, I can hear you now.
Things change fast in live television. As I was saying, now is a peculiar time to suggest that the worst is over for high growth. Why is it?
Yeah, Scott, it's not so much the worst is over, but we just don't think the risk reward's all that great. And we think we're smart, but with this portfolio down 45%, we're not sure how much more we're going to get in the short term. And so a lot of times, and we remember 00 and 01, where you got some face ripping, short covering, and we just wanted to step out of the way. Today was probably not the best day. We probably should have waited today, but down 45%. A lot of that good news, a lot of that impairment's already priced into the stock.
Well, I mean, it's good to at least be able to acknowledge, and for the viewers to see in real time, it's hard to time the market.
No,
it's hard to make a call. I mean, you make a call based on conviction, not timing.
No, that's absolutely right. And when it comes to the market, and I think you hit the nail on the head. What we're telling clients is, you don't time the market. Don't try and call the bottom for the market. Start looking at stocks, invest in stocks, not the stock market. We're beginning to see a lot of value being uncovered. We didn't believe that at the beginning of the year. We thought you'd get a 10% correction. We got that more, but there's a lot of indiscriminate selling. We're going back, or we think we're going back into a growth market, and we're starting to see some growth opportunities pop up at reasonable prices.
So I referenced earlier this story that's going around now about the rebalance of the MTUM ETF. It's the semi-annual rebalance in which you just, coincidentally happened to write a report about, which was mentioned in this story. You suggest as much as 75% of this ETF could be turned over. There seems to be, it's a switch into value and energy and out of tech and financials. I'm wondering if what we saw in the market is in any way, do you think, some front running by Wall Street trying to get ahead of that rebalance, or if that portends that we could see some more selling from those growth names like a Microsoft and some of the others like JP Morgan, which this specifically says are coming out, and names like J&J, AbbVie, and Exxon, for example, are going in? Yeah,
Scott, there's a couple things there. What we've seen over time is that things that are getting taken out do underperform in the 30 days heading into that. And so maybe tech is a little bit heavy because of that, but I think there's a lot of other reasons why tech is heavy. The more important thing, and the thing that we kind of focused on, is last year there was a bit of a winner's curse. Last year banks went in, and we thought that was going to be a positive, but what happened was banks did outperform by about 24% going into the rebalance, and then underperformed about 13% after. And what's going in right now, we're going to see a lot more defensives go in. And funny enough, not so great news out of Target and Walmart recently.
Yeah.
So maybe that winner's curse does stick.
Yeah, I don't know, right? The staples, some of those food stocks, well, they got hammered today. Chris, I appreciate it very much. That's Chris Harvey.
Thank you.
From Wells Fargo.